Alrighty, good morning everybody. It's Monday, June 27th, 2022. Let's go ahead and get started here. I want to just review how well some of these levels worked on Friday just to um, demonstrate where we ended up having trouble at the end of the day. Um, we did talk about being long if we could break through, I believe, the high of earlier that from the week before, and sure enough, as we broke out in right out of the open, we went ahead and got through that high, and then we were looking to get long for a test up into some of these areas up above, and so you can see there were a couple entries that I took here when we pulled back into this 38.53 to 38.55 area, and then from there the market just started ripping higher. We did come up, pull back right to 38.75 to the tick, and then continue to go ahead and push higher. And let's see if I can get this going here. We just chugged all the way up and came right into this 39.60.50 to 39.22 area and got a rejection from there to end the week. So right into that pocket that we've been talking about for probably a week or two, and then went ahead, pulled back, and then in the Globex session yesterday, Sunday afternoon, we came right to 39.22 and then failed and pulled back and then came up, broke through, and then you can see we came down and held VWAP and came right into this pocket here between 39.40 and 39.50, and now we're pulling back. So the two major areas we expected to find resistance are the two major areas we got pullbacks from. So a nice pullback here again in the Globex session yesterday, and then a push right up into this pocket here for a pullback right down into the same resistance level that's now acting as a support. So just some really pretty stuff in my opinion, just zooming out and looking at how the market has reacted to all the levels that we have on our charts. Again, 75 acting as this perfect support to the tick for the push higher, only to fail from 1650 to 22, and then push back up and fail right from that pocket up there. So really awesome stuff. And so that's where we find ourselves this Monday morning coming into a new week. We are continuing to push higher. Again, we'd said all the way back from the lows of last 2 weeks ago, we had a really strong multiple time frame bullish signal. So our question that we had was how far was the market going to push before the bears went ahead and swatted it back lower. And so far, the bulls have gotten a pretty nice run. So let's go ahead and jump up to the high time frames and see what has changed from that perspective. And we'll go up the annual chart. Don't think there's really much new to add. We almost have a bearish engulfing bar, but as of, like I said, the low of 2 weeks ago, we've got this little bullish push, and we're coming up to retrace the sell-off that we made this at the beginning of this year, going into um, the end of May there. Looking at our quarterly chart here, or 3-month chart, really nothing else new here. We have, again, a potential bullish divergence that we've been talking about for a few weeks now off of that low that we made from the low of 2 weeks ago. And that's really it. And we saw this last week, and I believe we saw it the week before as well. A potential bullish divergence. And right now, this candle, you can see it looks like we're getting some decent recovery, a nice wick there to the downside. Okay, down to our monthly now. Same thing that I said on the quarterly. We see the same exact signal, bullish divergence from the low. And we've seen it here for about a week or two. And again, not much else to add other than we do have an even more of a larger wick when we look at this on the monthly. So who knows where we're going to end up closing out. We've just got a couple more days here before this candle closes. And in my opinion, despite it being a red bar, to me it looks like somewhat of a reversal bar here if we close. the way it looks right now. So in a few days, we'll come back and take a look at this monthly when the June month ends here. So not too much new on the higher time frames. Basically the same things we said for a couple weeks now. And then coming down to the weekly chart, opening up for a new week, we have the potential bearish divergence from the high. So remember, all three of these higher time frames have a bullish divergence from the low of 2 weeks ago. And that's what's led to this breakout to the upside. So for 2 weeks now, we've had the expectation that there was a good indication for the breakout, right? So we got it on the weekly, but on the new weekly bar, we're starting to get indications of some bearishness. So here's the caveat to that. It's coming from the high of a couple weeks back, maybe 3-4 weeks ago here. So we could still push from where we are right now, around 39.50, all the way up to that high, and still we could potentially have the argument for that bearish divergence from this weekly perspective. So that's the issue. We still have a lot of room where this can continue to push, and if RVI continues to push, we'll still have that bearish divergence forming off those highs. So with that being said, just keep in mind that we do have what looks to be a pretty clear bearish divergence at the moment. And if we can't break the high of, let's see, 1, 2, 3, 4 weeks ago, then we will continue to have it, and maybe we'll get some confluence with our daily and maybe our 4 hour and some other things. So we'll continue to watch that. Remember, every time that weekly and that daily sets up, we get some pretty big moves, right? So we had that happen here back at the week that closed on June 3rd, and the market sold off about 800 points. We had the same thing 2 weeks ago from the lows of 2 weeks ago, and now we're up just about 300 points or more. So pretty big moves when we get these signals lining up. Let's go down now to our daily, and the daily does not agree with that weekly bearish divergence that we are seeing. So what that tells me is maybe we have a little bit more to go here before that daily starts to give a bearish divergence as well. And maybe when that daily signal starts to form and the weekly still has it, when those two come into alignment, maybe that will be about the time we start to see that turn. Again, look at, here's the daily up at top from 4 weeks ago, got the bearish divergence, and then this 800-point sell-off in confluence with the weekly. And then again, off the low of 2 weeks ago as well. So we'll see when that daily starts to give us something. We would need to see RVI come up and start to push basically up into 60 or higher here. And then our price, we would want to still be lower than that major high over there, or at least the high from the middle of the week there, over there. So if we don't break the highs of that back here from a few weeks ago, and the RVI is higher, we will then get that confluence. So we'll watch for that, but right now, don't see really anything like that on the daily. And again, we came up into our 50% retrace. Remember, I talked about this at the beginning. We came right into 39.22 in the overnight session from yesterday and got the pullback. And now we're attempting to break through, but we hit that 39.40 to 39.50 zone there and pull back again. So this morning, the two higher time frame levels that are in the way to the upside is the 61.8 retracement level of this whole sell-off from the high of 4 weeks ago down to the low of not last Friday, but the Friday before that. And so that 61.8 retracement, 39.88 half. So be aware that that is the next level we could be coming up to contend with. And then from there, it's back to the lows of 4 weeks ago here, right at 40.74, I believe. So that's the higher time frame levels that we're pushing up into. Nothing else really sticks out to me from this zoomed out perspective. All right, so be aware of those two areas. And now let's go down into the 4 hour. Here's the thing with the 4 hour. the 4-hour is already giving us a potential bearish signal. So in this case, we've got a weekly and a 4-hour, but the daily right in between it isn't quite lining up just yet. So that's why we still want to wait for this daily to indicate that bearish divergence, but we do see it on the 4-hour and the weekly. So if you look back to all the highs from 4 weeks ago down to where we are right now, pretty much every high you could make an argument for that bearish divergence, including the high of 4 months ago or 4 weeks ago up here. Sorry, 4 weeks. So when that daily starts to print, we might get the breakdown back to retest the lows from 2 weeks ago. But outside of that, the 4-hour doesn't really have anything else to add to the picture here. Again, an argument for a bearish divergence from this high right now. And outside of that, not much else to really add here. So let's go ahead and actually, let me just mention here before we go to the 60-minute, the major swing high from, I want to say, yeah, from last week. So basically, the major swing high that we talked about needing to break through back on Friday to have a bullish argument for higher, this high here at 38.43 could potentially be some type of ledge for support if the market starts to pull back. So be aware of that ledge there that is at 38.43. And then a little bit further down, you can see we've got this other ledge here right around this high at 38.05 half. Right? So those are the two major swing highs I see that could become support as the market pulls back, or if the market pulls back here. And finally, we're going to go down to the 60-minute chart and look at all the levels, major and minor eye levels. We got the major gap here, and then all the major swings. So right now, let's go ahead and zoom it up to this area. Again, I just want to pat myself on the back, pushing right into 39.16 half to 22, right to 22, pulling back, hitting the top end of the gap, and then coming right up into this 39.45 to 50 area. And now we're pulling back right into 16.50 and 22 again here. So the question's going to be, especially with a potential bullish divergence from this pullback low that we've gotten in the overnight session, question's going to be, are the bulls going to hold this 16.50 to 22 area and start coming up to break through the overnight high and push higher here? And so if they do, let's look at what's up above. We've got the 61.8 retrace I mentioned from that daily perspective up here at 39.88 half. And then we have the major eye level pretty just in front of it at 39.84 here. So this little section, 39.84 to 88 half, very well could be a little trouble spot as if the bulls push up into this area. So let me go ahead and mark that. 39.84 to 88 half. Get that on all our charts. And then if they continue chugging through that little area there are some things around here. This minor level is basically the same level I had on the chart from the previous contract. It does delineate a little bit of a box right there, but I'm actually looking more so at this area right here as being a little area of trouble as the market pushes higher. And I know this is quite a wide swath, but the idea here with this is to be aware of the extreme low of the shaded area over here and then the extreme high up here. So I should maybe draw this in as just distinct levels, but just be aware as we come up into this pretty widely shaded area. In fact, you know what I'll do? Let's mark it here with just some dotted lines. We've got this swing here at 0675, and we'll make this a swing high, swing low. And then we basically have the center point right around at 40.1575. So I'll just make this 1575. And remember, these are just visual representations. So on our shorter time frames, as we push up into here, we're aware of this major block right here. And so let's do that. And then we've got the top end of the block somewhere right around 40.30 quarter, 40.30 half. So we'll get that on there. All right, so if we do end up getting through 84 to 88, they get through 97. Like I said, this one's quite not quite as strong as maybe some of the other levels we look at, and then we're right into this little pocket right here. Okay, and that 40.23 also going to be relevant in there. So be aware of those little things as we get into that little structure zone, and then from there it's up into 42, and then 40.74 half, which was that swing low, up into 40.81. And I think that's really all I'm going to cover here on the upside. Well, you know what? It's Monday, so let's just get them all in there. So the rest of the week, I don't have to keep mentioning them. So if the market does get through, and remember, this area is that major swing low that we were looking to break through a couple weeks ago. If we can get through that area, got this a bunch of little levels in here: 41.07 half, 41.23, 41.42, 41.66, 41.84 half, 41.92, 42.03, and 42.13. Are we going to push here another 200-300 points? You know, who knows? But I think that covers enough to the upside. So that's everything that we would need to be aware of, and those will be good targets if you end up getting long. On the flip side of things, if the market does not hold and continue to push here, like I said, holding 16.5 to 22 and getting through the pocket from 39.40 to 39.50, then we've got to consider everything that we're going to be pulling back into. And that's going to include the gap from last week that we were looking to push up and fill, and that would be that 38.96 half down to about 38.79. And then we have our minor eye level 38.75, which again was that level we pushed through, pulled back, bounced off of to the tick, and started coming up higher. So that little pocket from 75 to 79, a potential support zone on the pullback. If they break through there, we've got this little area from about 38.53 up into the, let me get the actual number on this. We've got a little pocket 38.50 half to 38.55 there. So be aware of that pocket. And then we come down into that swing high I mentioned on the larger time frame perspective there, going back to the high of last week, or the major high of last week at 38.43. A little bit further down and we get into this, basically this structure pocket right here, and the swing high is 38.34 quarter. So 38.43 quarter down to our 38% retracement. So that's 38.30 to 38.34. And I didn't mention this earlier, but if you do a fib from the low of last week, 36.39, or the low of 2 weeks ago, 36.39, that's where we had the multiple time frame bullish signal, all the way up to our overnight high. We get 3 major retracement levels. So that's where I got that from there. Again, it's 38, 30 to 34. A little bit further below there, and then we have our major eye level 38.22, and then we come back into this area here, 38.12, 38.07 quarter, and then these 2 swing highs that I marked here at 07 quarter, no, wrong line, 38.05 half. So there's this little pocket 38.05 half to 38.07 quarter, and then we're down to the 50% retracement of the whole push up from the lows of 2 weeks ago, and that would be there at 37.93 half, and then we're into 37.82, 30.74 half, and then the 61.8 retracement at 37.57. If they continue to sell off from there, we've got all these same major and minor eye levels: 37.35, 37.09, 36.90, 36.81, 36.62, and then we're going to be breaking the lows, or at least coming down to test the lows of 2 weeks ago at 36.39. From there, all the levels below we already talked about the week before, so I'm not going to sit here and list those out. Spend enough time here on levels. Jesus Christ, there's just so much stuff. But I want to lay it all out here on Monday so that going into the rest of the week, I don't have to sit here and list all these levels out. Now, there's one thing I need to mention. If we continue to push to new highs, the three major retracement levels I mentioned are going to change. So just be aware of that. For now, they're going to sit there tentatively until we get new highs, and then we're going to have to reconsider those three levels. Outside of that, everything else should stay the same all throughout the rest of the week here. So I want to cover that, get that over with. And then the final thing before we get into the morning trade room is just look at the 10-minute chart here and see, as far as our power levels go, where they're sitting in relation to everything else that we've talked about. And you can see that 50% of Friday is sitting here in that pocket that I highlighted from 38.50 half up to 38.55. Remember, 38.55 is that first major retracement level. Or actually, I take that back. It's not. That was from last week, and this should not be out this far. But 38.50 half up to about 38.55 is a good pocket there. And then our low of Friday happened to be basically our minor eye level, 37.82. You can see that they went ahead and ducked down below it by 3 ticks and then bounced out, right? So low of Friday was basically our minor eye level. And then if we come up to our high of Friday, that's what gives us this little pocket in here, 16 half, again up to that 38.22 area. And if you remember last week, I believe we had a major level coming across basically right where the high of Friday is. So those are our daily power levels, and then we have our OPL, our holy OPL, sitting right here that we're testing at the moment. All right, market's just about to open. I got to run for anyone watching on YouTube, and we're going to go ahead and see what we can get here coming into the open. Take care.